You're 30 years old, you hold an MBA, and you've already climbed to head of finance in a smaller firm. But as you look toward larger organizations, you've hit a promotional ceiling that your experience alone can't break. The issue is a specific technical gap. Elite leadership roles in banking, insurance, and large corporates require proof of competence in complex reporting, group-level governance, or sophisticated portfolio theory, areas where a generalist MBA provides limited depth. While your degree handles the strategy, these organizations demand a specialized license to practice in either accounting or investment. This forces a high-stakes decision: pursuing the ACCA to lead corporate finance departments or the CFA to manage capital and assets. In the mature markets of the EU and the UK, general business acumen is no longer enough to secure a C-suite invitation. Lacking the specific credential required by a regulated industry acts as a hard stop on your career progression. This isn't a quick resume fix. Both paths require 2 to 4 years of studying during hours usually spent with family. The financial investment is also concrete, with total costs ranging from £1,200 to over £4,500. The real danger isn't the difficulty of the exams, it's the risk of misallocation. You could spend thousands of hours qualifying for a credential that ultimately points you toward a desk you never intended to sit at. Choosing between them requires you to look past the curriculum and identify your terminal career goal. You need to know exactly which room you are trying to enter before you commit to the requirements for entry. The ACCA is the standard for corporate financial leadership. It focuses heavily on the mechanics of group-level finance, international financial reporting standards, and the strict audit compliance required of large corporate structures. The full path involves 13 papers, but as an MBA holder, you can often secure exemptions for the foundational modules, allowing you to bypass up to 9 exams and focus immediately on the strategic professional level. For the remaining papers, you'll navigate a 2026 fee structure that includes an £89 registration fee and tiered exam costs. Expect to pay between £116 and £155 per paper, depending on how early you register. There are also mandatory non-exam costs to budget for, specifically the Ethics and Professional Skills module, which adds £60 to your total before you are eligible for membership. This path is designed for those aiming for Group CFO, Head of Finance, or Financial Controller roles within the EU or UK corporate sectors. While it is the definitive bridge to corporate seniority, the ACCA curriculum is largely irrelevant if your goal is to work in equity research or front office investment banking. The CFA is the standard for the investment industry. It is a deep dive into capital markets, asset valuation, and the quantitative theories used to manage large-scale portfolios. The effort required is high. Most successful candidates report spending at least 300 hours of intensive study to pass each of the 3 levels. In 2025, the curriculum underwent a major change at Level 3. Candidates no longer follow a single track. Instead, you must choose one of 3 specialized pathways: private markets, private wealth, or portfolio management. The private markets pathway, for instance, focuses on the perspective of the general partner, covering the mechanics of private equity structuring and leveraged buyouts. These specialized tracks mean you are forced to choose a narrow professional trajectory earlier in your journey, moving you away from general finance and into a specific market niche. The CFA charter is highly regarded on the buy side, but it won't teach you the corporate tax laws or legal reporting standards required to run the internal finance operations of a multinational corporation. It's tempting to think that stacking both credentials will make you a candidate for any senior role in any sector. However, there is almost no institutional overlap. The CFA Institute offers 0 exam exemptions to ACCA holders, meaning you will start at Level 1 regardless of your previous accounting qualifications. The reverse is also true. CFA charter holders receive only 1 single exemption from the ACCA, the F3 financial accounting paper. You would still have 12 mandatory exams remaining. Facing another 2 to 4 years of study to learn overlapping concepts provides a poor return on your time and carries a high risk of professional burnout. Pursuing both only makes sense if you are targeting a very specific crossover role, such as a CFO for a private equity firm or a buy-side analyst specializing in distressed debt. To find your path, place yourself on this map based on where you want to be in 5 years, not where you are now. If your goal is to lead the finance function of a major corporation as a group CFO, you are in the strategic corporate quadrant. The ACCA is your requirement. If you are aiming for equity research, asset management, or wealth advisory, you are in the strategic markets quadrant. The CFA is the standard here. If your interest is strictly in internal forecasting and business analysis, without the need for external reporting or capital market strategy, look toward the CMA or CIMA instead. This is a process of reverse engineering. Choose the specific desk you want to occupy at the end of your career, and then fulfill the specific technical requirements needed to sit there. For an experienced professional with an MBA, the goal is to bridge your resume gaps without sacrificing your seniority. You should not have to step back into a junior role to gain exposure. The right credential acts as a credible bridge. It provides the technical proof of competence in complex reporting or portfolio theory that allows you to move into larger organizations while staying on a senior leadership track. Stop adding general certifications to your resume. Identify the specific technical requirements of your target role and focus exclusively on meeting them.